Good morning from Europe. It's a Tuesday, the third day of March, and the fourth day of war. The war between Islamic Republic based in Iran on one side and US and Israel on the other side. Well, the tensions is increasing, especially in the last hours after Iranian attack to the U.S. embassy in in Saudi Arabia. Tensions increased right after that. Donald Trump reacted to that and told that we're gonna we will answer that hard and bad. Uh, Situations as such situation is mixed, and the financial markets reactions also is mixed. But however, I have to mention that last night the attack inside Iran continued very hardly and more, but especially from Israeli Americans focused on the south of Iran, where they can attack on boats in Persian Gulf, which is very important for oil and energy markets. American trying to control the south of Iran, and that can solve the problems that we have in the Hormuz and we have in the Persian Gulf. So the oil transfer and energy transfer can return it to its normal condition faster. That's why American could already destroy 10, if I don't mistake, the 10 ships out of the 11 ships that Iranian had in the Persian Gulf. This is what happened there and what's going on. So it sounds like that's why the problem market's counting on a short-term higher oil price. As the Iranian itself, they didn't have a much export. So if we talk to take out the Iranian oil export, there is nothing changing in the market as we have the oversupply in the market. But the only risk is the risk that Iranian can create for oil supply or oil export across the Middle East and especially in around the Persian Gulf. If they can somehow erase this risk and they can somehow control this risk, American especially, that oil and energy price also will be controlled and back to its normal situation, even lower than before war starts. Because even before war starts, I mentioned before that the $65, $66 that we had before war starting the war, it was already $10 above the market expectations and of the real price, which is it's supposed to be around $55, $56. So if we can remove this risk from the market, it means that we have the opportunity to see the oil price even lower under $60. That's what's happening there and what's going on. Anyhow, that's sorry. Yeah, but there's a news came out. It's just for a second and check the news. The news from the war is like every second while Israel or American attacking this place or that place. Whatever it is, the situation is really complicated there. Iranian, they lost. We know that the Islamic Republic they lost their leader, supreme leader. Now they're trying to find a new one. However, I don't think that the new one also can live long. Anyhow, the situation is there. Let's go check the economic data and then economic data and economic calendar, and then we can go to the chart and see the prices and market reactions to the news. After yesterday update, we had the German retail sales increasing only 1.2% annually and falling by German retail sales fell on the monthly scale and on the annual scale it increased only 1.2%, showing that showing that really this retail sales issue that we talked about that several times in recent months, that the retail sales issue is the lower retail sales is the main reason of the lower inflation in the Eurozone as well. Anyhow, we had the same negative data from Switzerland, where we saw that the retail sales on the monthly scale annually we had actually on the annual scale fell by 1.1% in January. Manufacturing PMI also in Switzerland fell from 48.8 to 47.4, but PMI data in other European economies, they were better than expected, better than previous months, showing that the European manufacturing sector is slightly recovering, and in most of these economies, it's increased above 50 expansion area. On the other side, in United Kingdom, S&P Global slightly fell from 52 to 51.7, but still above 50 expansion area. It shows like that economic growth slightly slower, but still positive in a positive on the positive side about 50 expansion area. Mortgage market with the weakened in United Kingdom with the mortgage approvals slightly eased to 60,000 from 61,000. That shows that the mortgage market moving weaker in United Kingdom, moving slowly. I was thinking that we can have a slightly better numbers and better data there as the market expecting lower interest rates for the future. So so especially for the floating rates, we could I was expecting to see the mortgage rates to be approved, but still it's lower. In India also, the data published didn't confirm the expectations. Industrial and manufacturing activities both slightly weakened than expectations. Then we had S&P Global Manufacturing data PMI in Canada, which slightly increased from 50.4 to 51, but in United States. Let's go to the United States. Both S&P Global and ISM Manufacturing PMI, they were better than expected, above 50 expansion area. But in S&P Global, we saw the slightly increase from 51.2 to 51.6. In ISM Manufacturing, it eased slightly from 52.6 to 52.4, but still better than expected, still much higher than 50 expansion area, showing that the US manufacturing activity is moving fine. We are still positive on that, but the only number that we should be carefully watch that is the IC manufacturing prices, which increased from 59 to 70.5, showing that the prices are still sticky. And we should be slightly more careful about these numbers. However, the 3 and 6 months bill auction, we saw slightly weak. We can say something in 3 months. Bill yields increased from 3.59 to 3.61. Not big change, but still slightly increased. For 6 months also from 3.52 increased to 3.53. It shows that in a short term, still markets counting on a higher. This higher for longer means that, but the changes, they were not a big changes. I mean, it was not a big deal, but still, the markets, it shows that the market's still expecting higher for longer. In New Zealand, housing market increased slightly. Generally, the housing market activity is slightly better. But in Australia, we saw a very big fall in building approvals. Increased only 8%, while the previous month it increased more than 16%. Building approvals on the monthly scale, that building approvals annually it increased just like 8%, but on the monthly scale fell by 7.2%. Better than previous months, which fell by almost 15%, but still it's negative and showing that the housing market in Australia is very weak, and most probably with the weaker labor market activities and now the housing market with the risks that we have because of the geopolitical tensions, most probably Australian Central Bank, after increasing the interest rate by 25 basis points from 3.65 to 3.80, not going to increase anymore, and even maybe they will think about the cutting the rates. In Japan, we had unemployment rate slightly increasing to 2.7%, while the job application ratio slightly eased from 1.2% to 1.18, showing that the labor market slightly weakened, and that can support the idea of Mr. Keiichi of more support that probably Japanese economy need. 10 years 10 years bonds action in 10 years bond yields also in Japan slightly eased from 2.24 to 2.12, supporting the idea of lower rates in the long run in Japan, as the inflation is already under control and government is trying to have more supportive policies. In Turkey, inflation eased to 2 point almost 96, almost 2.3 eased to almost to 3% from 4.8% to 3% on the monthly scale annually, from 30.6 increased to 31.5 on the other side. I mean, annually it's increased inflation. Uh, Producer price index, or PPI, also fell slightly from 2.6% to 2.4%. Annually, also from 29.8 eased to 29.5. Sorry, 20 PPI on the annual scale from 27.2 increased to 27 point almost 6. That means that the producer price index is still sticky, and despite slighter inflation on the consumer side, we can see the inflation on the producer side is still sticky, and that can hold the current rates higher for a slightly longer time, and inflation still should be watched more carefully. In Spain, we will have the labor market data. Then market will focus on European inflation, where we are expecting to see unemployment rates. Sorry, we're expecting to see the inflation rate at 1.7% for headline and 2.2% for core inflation. That's what the market expecting to see. And one more time, that can confirm the weaker demand on the consumer side, as this weaker demand putting the prices under pressure, and that will end with the lower inflation. That's what market expecting to see. In Italy also, we are expecting to see inflation slightly increasing by 0.3%. Italy was one of the good economies in recent years, in the past 2 years, but these numbers showing again that this economy also is taking more, receiving more pressure. Now the Spain and Netherlands, they are much better than other economies across Europe. Today we're going to have the Red Book retail sales data in United Kingdom. Also, in United States also, we are expecting to see 6.57%, the number between these areas, confirming that still the retail sales and the consumer side in the United States is going fine. However, the market now more than economic data, watching the geopolitical tensions to see what's going on. Let's check the chart and see how this geopolitical tensions changing the prices and changing the market. Let's start with the VIX, the market risk. We can see, as you can see, the market risk again increasing above 22, while yesterday it fell on almost under 21, almost to 20.5055, but still again increasing, showing that the market is still counting on the higher tensions slightly, especially after that US President Donald Trump didn't deny that maybe US sent the troops to the Islamic, to Iran during the war. So that increased again slightly the tensions, while they mentioned that it can increase, the duration of the war can take longer than 4 and 6 weeks, between 4 and 6 weeks that they were expecting at the beginning. That can long that can just like take a longer time. So that was the reason to see the increasing in the market risk. This higher risk increased the demand for the safe havens, especially for the US dollar index, seeing that the DXY of 90 at 98 point almost 8, increasing towards 99. This higher raise in the US dollar index put the pressure on the gold price, seeing the gold price slightly falling towards 5,300 after that. Yesterday we saw that prices around $5,420, $430. But still, in a bigger picture, the gold also is in demand, and we can see prices higher. On the other hand, on the silver market, the silver fell much more than gold, as the silver in line with the being as a safe haven. It is also using market counting on it as a industrial metal, while the market in the stock market is falling sharply. That can have a negative reaction on the silver price as well. That's why you can see the silver price lower at these levels. Anyhow, but still in the bigger picture, the silver also is still in the demand. On the other hand, on the energy market, gas prices was still increasing. Yesterday, Iranian attack to the gas stations in Qatar, and that Qataris, they pause the export and they pause the production. That's why you can see the prices in the market is increasing. The gas price also increasing above $3, while 3 days ago it was around $2.85, 86 cents. Almost the same reaction we can see in energy and oil market, but as mentioned at the beginning, the Americans try to control the Persian Gulf and Hormuz. That's that means that they were focused mostly on Iranian military power on the side of Iran, where they can control mostly the Persian Gulf. That's why the focus is American focus is in the last days is in those areas. So that increased the prices for the energies and oil price as well. So you can see the oil price around $73. That can slightly increase, but not it's not going to increase more than $75, $76, and that can be very long term. The same reactions, the same reasons that increase the oil price, putting the pressure for the stock markets. That's why you can see the stock markets lower after last night closing higher. The market now thinking that it can long longer. That's why they are putting a slight, they're increasing the risk, market risk, and they're putting the pressure that can put the pressure on the prices. S&P 500, Dow Jones, and the Nasdaq, all of them, they are in a negative movements. They are under pressure, and the downward trends can continue for now, but it's not going to be so sharp downtrend. However, don't forget that in the recent days and the recent weeks that we had earnings reports, these earnings reports also supported the prices again, and now we don't have the earnings that much, just like few companies left there. That can also increase the risk for the prices in the stock market. It's the same condition we have in the cryptocurrency market. While the Bitcoin last night could touch around $70,000, now again under pressure around $68,000 and even lower. The price in the Bitcoin price is a slight movement with the downward tendency. We don't have any positive positive reason for in the market, unless if it can recover above $72,000. Otherwise, the price is still under pressure, downside wave with the downward tendency. That's what's happening in the market and what we are expecting to see. Hope it was useful for you. Talk to you tomorrow. Have a good day. Bye bye.